Let's get right to the floor show. Joining me now, Great Hill Capital Chairman Thomas Hayes. Nice bounce back today at 30,000 feet.
Yeah, I think I'm going to throw a little bit of a wet blanket on today's move, Liz.
Which is unusual for you.
Yeah, I've been accused of being a perma bull, but we have to be fearful when others are greedy. You know, we've seen a record call buying among retail investors for the last 25 consecutive weeks. This is the biggest streak since 2020. It usually doesn't end well. Bullish sentiment, AAI bullish sentiment, 44%. That's very, very high. National Association of Active Investment Managers, they had equity exposure of 35% at the lows in April. They're now at 100%. So I'm not calling for any type of major correction. I don't think the hiccup yesterday is over. Usually the secondary corrections, after you have a 15% plus correction that makes all-time highs, the secondary average is about 6%. I think we've got a little more to go, Liz.
I mean, look at the Russell up 44 points, nearly 2%.
Yes.
This is a beautiful move for the small and mid caps.
Yes.
Is that a place that you're looking?
I love small and mid caps. They've been outperforming since the summer. Since July and August, small caps have outperformed large caps. No one's paying attention to that. And I think outside some of these frothy pockets that everyone is chasing, you could effectively throw a dart at a board, Liz, and find a reasonably valued stock. So it's a tale of two cities. You have this frothy pocket, which Michael Burry walked the world up to yesterday.
Okay, Michael Burry is a short seller, famous for The Big Short. He made billions during the subprime crisis.
Yeah, and I think his action buying puts on 5 million shares of Palantir, kind of the activity walk us up to, he did what many investors were thinking that this area is a little bit overvalued.
Well, can I just say, though, Andrew Left of Citron Research was here a month plus ago, and he said, I love Palantir. This valuation is crazy.
Well, here's the thing.
He shorted it first.
Yeah, look, Michael Burry has a track record of making billions on shorts, so people pay attention because he's managing money, right? Mm-hmm. So, you know, you've got a business that's trading at, there was a report out on Monday from Wedbush saying it's going to be $1 trillion company. They did $1 billion of revenue, not profits. $4 billion, that's 250 times sales. That's crazy town. Palantir is a great business. They're doing great things, but you're paying for too many years of perfect execution up front.
What about the argument that the NVIDIAs of the world, the Googles, the Microsofts and Oracles that are doing so much of this spending, they have great cash flow? What about that argument, that they are solid, they do make profits, and they have the money to do this?
I agree, but price is what you pay, value is what you get. They're actually spending 60% of operating cash flow on CapEx right now. There's only one other sector in the market that's spending that much on CapEx. Do you know what that is? It's called big oil. So now these tech companies that had big valuations because they were CapEx light, they now still have high valuations, but their CapEx is...
So on the screen, tell us what we're seeing here. 12-month free cash flow for Amazon, Google, Meta, Microsoft, and it's going down.
Yeah, 43% from Q4 of 2024 to Q1 of 2026 because of all the spending. And what investors are saying, and what they started to say in mass yesterday, is we want to see a return on that invested capital. They're not going to see that for the next year and a half to 2 years. So we're going to have hiccups like these in this little frothy area of the market.
Do we sell our NVIDIA shares? Do we sell our Oracle shares?
I think we play AI because this is an early inning theme. We believe in the AI revolution, but you play it with less expensive stocks that can benefit.
Such as?
Such as Alibaba. You know, we've been in this forever. We couldn't give it away under 100. Now everyone's starting to want it at 160. It can go a lot higher over time. That's the cheapest AI play in the world right now. By the way, you get the e-commerce business and the cloud business for free. Intel, the success of NVIDIA, AMD, ARM Holdings, all of the designers is dependent upon supply. They have all the demand in the world. They have a bottleneck of supply with Taiwan Semiconductor. The government has now stood behind Intel. They're going to be supplying to all of these designers.
Okay, let's just be clear. When you say supply, you mean actually manufacturing the chips that NVIDIA and the world design.
Correct. So Intel is a cheap way to play the AI revolution. Then you have energy. We've got to power it. You got Comstock Resources, which is the lowest cost natural gas producer in the Haynesville Shale. Jerry Jones owns 71% of that stock. And then finally, the backdoor way to play AI is the data center growth is going to be backstopped by Generac. They've got a $300 million backlog on data center backup generators.
I never think of them as a data center play. I think of them as a hurricane and
yes.
utility play.
And here's the beauty. The stock is down a little bit right now because they had a weak hurricane season. They have 75% of the home standby generators. What people don't realize is that backlog is going to $500 million by next year just on data centers alone.
Fascinating stuff. Tom, stop being so smart.
I learned from you.
Good to see you, and good answer. All right, President Trump expected to